Have you thought about growing your wealth but don't know how to start? Talk to Invest by Metricon. They make property investing easy. So for all your tomorrows, build your financial future today. Invest by Metricon. Build wealth. Build today.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, Phil Tarrant, host Smart Property Investors Show, smartpropertyinvestment.com.au. Hope you're keeping engaged and connected as we navigate this current lockdown, which is now sort of expanded right across the nation. Started in New South Wales and now pretty much largely everywhere. Huge disruption, a lot of questions being asked, how we ended up here, how we come out of it, and no doubt you're all dialed into the 11 o'clock updates from all the different state premiers telling us what's going on. I think the clear message is that Australia needs to get vaccinated in order to emerge from this state of lockdown, 70%, 80%. A lot of contention around it right now. Who knows? There's even some state premiers saying, even if we are 70 or 80% lockdown, we're still going to keep our borders shut. So I don't think that bodes well for anyone. I think the Prime Minister gave a pretty good undertaking to the state premiers that get vaccinated, open up the borders, and they'll scale back international flights coming in. Don't know how that's going to work. A lot of issues moving forward. So what? What does it mean for property markets? That's what we're here for the read on smartpropertyinvestment.com.au. We're covering it every single day. Go and check it out on the website if you want to be informed and connected. A lot of data coming out as well. Be careful with data. We speak about quite a lot. Use your data sparingly, but there's a lot of clues and a lot of themes and trends that you can start seeing emerging in data to help shape your investment buying decisions moving forward. Going back to our high school economics, macro, microeconomic factors, and you put that in the context of the COVID-19 environment, who knows what's going on? So we're going to try and give some sense to it in this particular podcast. Steve Waters joins me. He's a buyer's agent from Wright Property Group, property strategist. We've known him for many years. He's here to give us some commentary, his read on the market, ground truth from what his customers and clients are seeing right now, and asking a big question. Is it the right time to be investing in property? Steve Waters, how are you?
Yeah, good. I love the preamble, especially the part around, what a disruptive moment in time we have. But when we look for disruption, there's always opportunity.
Yeah, that's my baseline philosophy that I embrace. It's definitely a mindset thing. Investing in property, we've spoken about mindset before, Steve, and mindset is an important attribute for most successful property investors. I'm a perpetual optimist with most things. I think you sort of subscribe to a similar philosophy, Steve.
Oh, 100% I do. But I think it's the time frame is where the truth is. If you think you're going to make $1 million in any asset class overnight, well, that's speculation. That's not investing. And so I tend to look at it from that long-term horizon. It makes me sleep at night. And that way I can ride the peaks and troughs that occur around disruption.
Well, some of the readings, and I sort of read a lot, I'm a big reader, but it was around highly performing people. And one of the points was this inherent sort of optimism that you see in highly effective people, whether they're sports people, athletes, or business people. But the other one was also gratitude, Steve, saying that highly effective people have a good relationship with what they have at any given time. And they're able to consciously be able to sort of have a sense of happiness around where they are right now, irrespective of the environment. And no doubt that's a mindset thing that would bode well for property investors.
I think you could never lose sight of that, to be honest. If you talk about gratitude and people that are in my industry as advisors and buyers agents, we're some of the luckiest people around always, because we get to surround ourselves with the people that are doers. They are the glass half full people, the people that want to take control of their future. So we're very, very lucky to have that circle of people that surround us. You are the sum of the 5 people that you hang around with.
Yeah, well, to have an attitude of
gratitude. Which is why
that's why I never see you, right? But it's if you're interested, people tuning into this, because I do often steal his sayings and his way he packages up particular things. Tom Panos, I do a live show with him every single Thursday at 1:30. Go and tune into it. You can look at it on Tom Panos's, and a lot of people would probably know Tom on his Facebook or on Real Estate Business Facebook page. And go and check it out. But he will say, have an attitude of gratitude. It's such an important thing.
He's a great example of gratitude and half glass full kind of person. He's a very special person.
Yeah, he is, and those who sort of know of Tom and follow Tom, he's been very open with some of these health challenges, and he's always said that having that attitude of gratitude at any given time, as bad as it gets, you've got to look for the good in it, and it's definitely a mindset that a lot of property investors should be channeling. But that's great, the best mindset in the world. But if the market's no good, well, you're going to probably get a different outcome in your property. So you want to get a sense of trends and factors shaping this next 6 months in this property market to help people make these decisions in what is a very fluid environment. We've spoken about it before, a VUCA environment, volatile, uncertain, complex, and ambiguous. That's a military term used by the fighter pilot community and other sort of military sort of theorists and strategists about identifying a market. And if you want to channel that into property, volatile at the moment. It's up and down, it's left and right. It's hot as hell in some places, less so in other. Uncertain. We're operating in a very, very uncertain environment right now. No one knows what's going to happen. And we're talking about sustainable trends. We're talking about complex, so macro, micro economic factors. We've got election looming. We've got COVID-19. We've got interest rates, which were starting to bubble and boil, and people were talking about potential spikes in interest rates. We've got APRA about to jump in, or prior to this lockdown, to try and lock things up, which is now gone and ambiguous. No one knows what the future looks like. So, Steve, what are you looking for? What should property investors be leaning on in terms of data, in terms of market sentiments, or what they're watching in the market to help make these right decisions over the next 6 months?
Well, I'll take your leeway around the ADF personnel and the acronyms around it. The guys and girls that I deal with in the ADF are also massive components or proponents of do the basic stuff well. Yeah. Don't take the complexity of a situation and start to, do your own head in. Do the basic stuff well. And investing for me is no different, no matter what the asset class is. Supply of credit, supply and demand, cost of money, consumer confidence, population growth, jobs. All of that basic stuff is what we're looking for. It just happens to be that we are in a period of flux where there is a lot of uncertainty, but what we also know, to borrow a well-worn phrase, is the basic stuff is everybody needs a roof over their head. And we want to be part of the equation that supplies that as investors. That's our very basic sort of MO, if you will. And so keep the basic stuff easy. And it's very easy to get overwhelmed with some of those complexities within the economy, within the asset class itself. But try to brush it all away and keep basic.
Yeah, and I find I do it myself. And again, sort of back to I'm referring to myself as a highly effective person. If you get to a point where it becomes too much, or you lose a bit of direction because things are complicated and you're potentially overwhelmed with information or all the different opportunities in front of you, going back to basics is a great way to realign and recalibrate. And as a tool for property investors to sort of get some sense for what they should be doing in this environment. I've just done it myself, and I've shared it on the Smart Property Investment Show. I've gone down to basics in our portfolio and calibrated in the best way possible, and that is working on my interest rate, Steve. And we've had some conversations recently about my journey doing that, but that is the basics. Get the basics right. If you get the basics right, opportunities emerge.
Cash flow management 101 is essentially what it is, and that's what you did. You extrapolated all the income that you could, but you also reduced expenditure, which is in some way, shape, or form a better effect. And interest rates, as you've reported on, has been a major component of that, where you've reshaped the portfolio. I'd like to say overnight, but it took many, many, many hours for you to renegotiate those rates. But the result is there, and that is basically. Well, that is one of the basics of any investment class is cash flow management.
Cash flow management is key, and particularly if you're looking for opportunities as we navigate this particular lockdown and we look towards the future. And I think it's going to be a little bit more of a sustainable future for Australia, considering the rhetoric and the objective of vaccinating Australia. So the idea based on there's a whole bunch of reports out there, and no doubt everyone's dialed in with this, but saying 70-80% vaccination means Australia can operate largely as normal. And what that means is that moving forward, there should be less propensity for lockdowns. So it means it's going to be an environment that we can operate in with at least some understanding of what the future looks like, which is very difficult at the moment. So we're getting into that. How do you capitalize that? Let's go to a quick break. Back in a moment.
In the property investment industry, there's countless stories of the one that got away. And it's always the same reason. To pay the deposit, they needed the settlement from another property to come through, and they waited. Realty Assist Australia knows that when you find the one, waiting isn't an option. That's why they have a same-day settlement fund advance service. There's no credit check, no application fees, just a single one-off fee to advance your equity. Visit realtyassist.com.au/settlements now.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show, with Steve Waters from the Right Property Group, chatting about what the best investors are doing in this particular market. Now, Steve, with Australia vaccinated, hopefully, and the idea is that there's going to be less need for lockdowns, which means there's more certainty in how you can go about buying property. What are you seeing just on the ground right now, mate? This is one of the challenges with this complicated environment we work within. It takes so much longer to do stuff now, so you've got to probably do 2 or 3 times as much work to get the same outcome. And that's a hassle, right? And this is the moment in time. It's not going to be forever. It's a moment in time. How hard is it to bloody look at property these days and buy property, just considering the restrictions around it?
Yeah, that's a really interesting question. Yeah, you mentioned a moment in time. Yeah, the $1 million sort of question around that is, how long is this moment going to last for? Yeah, before we get some degree of mobility. Where it's challenging for all buyers, not just us, is that whilst the intent is there, and we see that via the various .com platforms around search criteria and high intent for that matter, we want to get through the property. The agent wants us to get through the property. However, the occupant, whether that be a tenant or an owner-occupier, is a little bit more resistant. And fair enough as well. And then you overlay that with the steel curtains or the steel rings around certain local government areas throughout Australia. And that's another element of complexity. And how that plays out at the moment, I believe, and I'm being quite general here because every market will have its own dynamics and a different sort of pulse to the market, if you will, or tempo, is that we're starting to see the auction numbers dwindle, not necessarily the results, but the amount of properties going to auction. So the results that we're seeing now are largely made up of the properties that were physically inspected by a potential buyer, and then the online auction was held accordingly. We're starting to see the pivot now away from auctions into a private treaty scenario where there are staged inspections, but also couple that with the fact that there is an element of sellers within the market, generally speaking, that are going, well, we know the market is buoyant. We believe it will continue to be buoyant. So why would I be selling my property now when there is a lack of mobility and I'm not having people through the front door to inspect the property? So my suspicion is that we will see the number of listings continue to drop. There's the very real potential that we may miss out on the, let's call it the spring selling season, if you will, which then may lead us, and this all is really reliant upon mobility, of course. Then if we miss the spring selling season, we get close to Christmas, vendors might say, well, we're around that Christmas time now, we might wait until the end of January, February before we put on our properties on the market. And that, once again, around mobility. So all while this is happening, there is definitely an element from a purchasing point of view where there's a pent-up demand situation happening, which was very similar to the earlier lockdowns from last year. Now, having said that, I don't believe that the rate of growth, which was almost vertical, will be the same. It'll be a little shallower. Nonetheless, there will be an element of urgency, if you will, for people to buy back into the market. And the big sort of elephant in the room is, I believe anyways, as well, is around serviceability with hours lost and how the lenders may will look around those serviceability calculations and how much money you can borrow. So the reduced hours, I'm just making up numbers here. Before the lockdown, you could have borrowed $1 million, but with reduced hours, you're now down to 750. So it'll be relying upon the income to get back to a level where the banks are happy. So there's lots of different components here, which are shaping a very uncertain following quarter, I believe.
Yeah, and to give some perspective, the some people are impacted by reduced hours, but not everyone. If you've got a good, stable job and continuity of that moving forward, I think there's some great opportunities in this market. This whole idea, Steve, that you got to work sort of 3 times, 4 times, however long it's hard it is to get the same outcome right now. You find a lot of investors just going, it's too bloody hard to worry about it, to buy property in this market. And therefore, the way I'm wired is that there must be opportunities out there. There's less buyers in the market because it's just too difficult to do it. There must be some gems.
There is. There's definitely some gems, but they're very, I'm not going to say they're few and far between. It's just that the process steps of DD or due diligence because of that lack of mobility, all the way through to valuers now being very far behind the 8 ball to get through a property, and then the loan pre-approvals or final approvals. There's a knock-on effect the whole way down the line. There is. I wouldn't suggest that buyers are retreating from the market at all. I think they're just as much as there was a quarter ago. There are people that still want to purchase without fail. It's just that the shift has happened away from, in some areas, from, say, the owner-occupier who had the grants, who had a level of entry in terms of their serviceability, their affordability. That's now out of reach. And as we've seen over the last quarter or two, investors have really come back into the market. But there is also some data to suggest that there's an element of investors that are selling as well. Now, I'd be very careful in the way that you interpret that, because that may have been someone who bought 3 cycles ago back in the middle of the GFC and have tripled their money, or whatever it may look like to them, who are just saying, well, now the time is right. But there's certainly no lack of buyers in there, whether it be from Mr. and Mrs. Joe and Joanne Public, or all the way through to the sophisticated investor.
Yeah, no, I agree. And you should be out there looking at the moment if you are ready, capable to get involved. And I want to have a chat about sort of being ready and capable, Steve. We'll just go another break, back in a moment.
The mark of financial success isn't about getting bigger, better, faster, or more. To Paul, success is freedom. Freedom to spend more time with his family, or giving back to his community, or just more time to go surfing. Paul Glossop, an award-winning property buyer and regular guest on the Smart Property Investment Podcast, has taken the lessons he's learned building a multi-million-dollar property portfolio and laid them out in his best-selling book, A Surfer's Guide to Property Investing. For a limited time, get your free copy of Paul's award-winning book and receive a roadmap for building both lifestyle and wealth through property investing. Grab your free copy today at purepropertyinvestment.com.
Welcome back, everyone. Phil Tarrant from the Smart Property Investment Show with Steve Waters, trying to make some sense of this current market. Now, Steve, operating in this environment is challenging, and one of the biggest issues that property investors face is securing finance, right? Even if you're a really good borrower, just the rigmarole of getting a home loan takes time, energy, and effort, and hopefully you're using good brokers support you with this. But do you need to start changing up your taxes? I had a chat the other day, and I just really wanted your view on it. I reckon there's a lot of inefficiencies in the mortgage system, particularly through those that choose a mortgage broker. And you get 60+% of Australians are now using a mortgage broker, and that's great because they're a huge enabler for property investors and owner occupiers. But I don't have the number, but there are so many loans, whether they're through bank branches or through mortgage brokers, that never get realised. So all the work and energy and effort goes into getting a pre-approval, and people then sit on that pre-approval. So they've got some level of degree of understanding of how much they can borrow and the price point, which then therefore allows them to shape their buying behaviour. And we've always said, if you're going to buy property, make sure you've got your home loan sorted out or your mortgage sorted out. However, in this environment, do you need a pre-approval in order to buy confidently as a tactic? Because the amount of time, energy, and effort to get the pre-approval, and then you sit on the pre-approval, say it lasts 6 months, and then you start all again. Are you better off securing the asset and then sorting out the finance?
Short answer is no, never. Especially in today's market where it's not, dare I say it, it's not about price now. Now, clearly it is, but I'm being quite general. It's about terms and conditions. And what I mean by that, as a buyer, you're looking for the edge for the vendor to accept your offer. Now, if everybody's sort of give or take at the same price, it comes down to a terms or conditions scenario. If you don't have finance pre-approval, in my belief, walking into a negotiation, you're putting yourself in danger firstly, but you're also potentially losing an edge that will allow you to be able to be successful in that negotiation. Negotiations are not a one tactic fits all scenarios. The way that you negotiate is really going to be based around the tempo of the market, and you need to change that up. And finance almost always is the key in this scenario. And so if you go, I believe, and if I just look at my clients, I'm adamant that we have the pre-approvals on hand so that we can effectively and confidently start the negotiation. Otherwise, we're leaving too many what ifs on the table, and I don't like that.
So despite the challenge, the hassle, the time, energy, and effort taken into securing a pre-approval and understanding of a bank's willingness to provide you with credit and how much there is, that is always outweighs the factor of the certainty that it gives you.
Generally speaking, yes. There's always sort of caveats to that, of course. In terms of the time and effort remark, well, that's just a cost of business. We need to put in the right amount of time to put us into that situation. And we all know that when we go for loans, it's a pain in the neck, and it's often repeating or repetitive information supply. Not the broker's fault. It's just the way that it works out. But you're potentially spending $500,000, millions of dollars. You want to have those ducks lined up, and you want to be very methodical in the way that you approach it. Yeah.
Well, this is an environment we operate within. I guess certainty and capabilities always trump some, time, energy, and effort. It is a cost of doing business. It is just a hassle, right? What are you seeing now? And the last sort of lockdown, there was this moratorium on rents. So the government pretty much said you can't, if you've got a tenant and they can't pay their rent for whatever reason, you can't turf them. And there was a lot of backlash around that from property investors, and there was a lot of tenant movements who went, well, we should never pay rent. Anyway, we won't go there. But then there was also this idea of banks allowing investors and owner occupiers to just put a hold on their home loans. You didn't have to pay their home loans. You can't do that this time around. Are you seeing much of an impact from your clients? I know a lot of people said, hey, I'll take a home loan holiday for a little while, but then they went and tried to get financing. The bank went, well, we're not going to give you finance because you couldn't pay your mortgage 6 months ago. And a lot of people went, oh, no, I just did it because I could, right? It's a very different environment this time.
It is. It's a very, very different environment. The mortgage moratorium, to some degree, allowed people to build up a war chest for what was potentially going to happen, which in some way, shape or form didn't eventuate. So there was a pot of money, if you will, that allowed them to, if they were investors, users, more deposit funds or whatever it may be, to invest in whatever the asset classes was. There was another scenario where the war chest was there, but it was spent on consumer goods, cars, boats, fridges, white goods, whatever it may be, which has a positive knock-on effect to the economy as well. This time we don't have it. It'll be interesting to see how that rolls out, but this goes back to the serviceability narrative I was giving a minute ago around how the banks will view this. We don't see any with our clients. We don't see any potential problems. There are no problems at this stage. But once again, it's about the education beforehand, so that you're in a position to be able to execute opportunity or propel your portfolio, whatever it may look like to you. But just being reactive is not good enough, especially when we have such an economy in flux and so much disruption. Now more than ever, in my opinion, is where preparation is key.
Yeah, and it's good to be prepared. So on that basis then, Steve, for sort of keep an eye on time, given the top three tips for preparing in this market to be an effective investor? One's got to be get your finance sorted out, no doubt.
Yeah, but your finance starts even earlier than the application. It's looking at that unproductive debt, credit cards, car loans, whatever it may be, hours worked, all that superficial stuff, which really erodes your serviceability position. So if you put all that in the one basket, number one is finance. And two, I think, is taking stock of where you are and where you want to be, because that in some way, shape or form will direct you to the slithers of opportunity around Australia, if that be the case. And that could be location, price brackets. Are you after growth? Are you after cash flow? Is it a balanced asset? So taking stock of where you are and where you want to be. There's two good ones. Number three, start as you mean to continue. As you know, I'm very, very adamant that people are always reviewing their situation. It's not a set and forget asset. So it's not like you visit it once every few years to take stock of your position. And it's something that should be done twice a year, every year, in a formal sense, where you get very granular down to that position, because that in effect will have a knock-on effect to potentially your subsequent purchases or just the way that you live life and how easy or how hard you do it.
Yeah, I agree with all that. And sort of back to mindset, embrace the environment. Don't fight it. Understand the fluidity of this particular market and how you can operate most effectively in it, because there will be those people who can't for whatever reason. So it's how you choose to approach it will completely determine your effectiveness as a property investor. And I spoke about that VUCA environment. Understand it. Google it right now and look at how you can see benefits and how you can leverage this environment to be the investor that does well. Steve, thanks for your time today, mate. I always enjoy chatting.
Yeah, pleasure as always.
Keep the dream alive. And it's great to have these chats. I hope you enjoy that. Remember, smartpropertyinvestment.com.au. We're sort of dialed in, got a finger on the pulse of this particular market and helping you make more informed decisions. One favor for me, please. Don't really ask for much. But this is where you can really help me out. Please keep those reviews coming wherever you listen to this, whichever podcast player. Most of you, no doubt, on the Apple iPod app on your telephone. The team here get a real kick out of it. 5 stars, if that's what you think we're worth. It means we can get more people listening to this and hopefully making better informed property decisions for a much better future. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
In the property investment industry, there's countless stories of the one that got away. And it's always the same reason. To pay the deposit, they needed the settlement from another property to come through, and they waited. Realty Assist Australia knows that when you find the one, waiting isn't an option. That's why they have a same-day settlement fund advance service. There's no credit check, no application fees, just a single one-off fee to advance your equity. Visit realtyassist.com.au/settlements now.